All right. Are you looking to buy a house, or maybe you've just bought a house and solar is on your mind, or maybe someone keeps knocking on your door offering you a solar lease? And when you're looking at the upfront cost of owned solar and you're looking at this guy offering you the lease with almost no money out of pocket, you're thinking that looks like a pretty good deal, but you're wondering what the catch is, and you can't wrap your mind around all of the money and all of the issues with it. That's what today's episode is for. We have an expert on that I'll introduce in a moment that's going to help walk us through this. And we're going to go over the difference between owned solar and leased solar. We're going to go over the issues in a real estate transaction. We're going to go over how much this decreases your buying power. The solar lease on a property you're looking at as a buyer in the marketplace could knock you down out of a bracket of home you're looking to buy. It could actually make that home unaffordable, or you not qualify to buy that home just by the nature of the lease being there. These things are more fraught than you think. We're going to get into all of it today, so stick around. As always, I'm your host, Rich Curtis, here on the Informed Homebuyer Podcast. I have my co-host with me, Dave Miller. Morning, Dave.
Good morning, Rich. Thanks for having me.
Yep. And we are lucky to have today's guest. Rob Kindt has been in the solar industry for nearly a decade. He's currently the sales and marketing director for Diamond Solar Solutions based here in Placerville, California. He's got a background, easy for me to say today, guys. He's got a background in product design and engineering. He brings a critical and discerning eye to the industry from that background. He's a residential solar specialist with a focus on solar paired with battery storage. More on that later in the episode and how that affects you guys, especially here in El Dorado County. He's helped hundreds of families just like yours here in Northern California save money on their utility bills. And when he's not out helping the community with energy solutions, you can find him spending time playing in the Sierras with his wife and 3 kids, or out coaching soccer. Thanks for being here this morning, Rob. We're happy to have you.
Thanks, guys. Happy to be here.
All right. So break it down for us. Explain to us, like we're a 5-year-old, the difference between a leased solar system and an owned solar system, just as some background education before we jump into all the rest of the details, Rob.
Yeah, so I'll say right off the bat, if you're looking at solar, especially here in Northern California, which I think we're going to focus this conversation on, different parts of the country are a little bit different, but here in Northern California, where energy costs are extremely expensive, looking at any other option besides the utility is going to save you money. That being said, like most things, it's all about the details, whether that's ownership, or owning with a finance option, or looking at a lease or PPA or TPO, third-party owner. Those are kind of all under a similar umbrella. So, the pros and cons between the two. I'll speak to the lease specifically first. The pros to it are you get solar on your home or solar with battery storage with no upfront costs. And that's, really that's as far as the conversation needs to go. If that's all you want to know about, are you going to lower your monthly costs? Then doing a lease will get you there. But of course, there's some catches to that. One of the other big benefits of this lease program that they have is they're going to cover equipment. That means solar, inverters, battery, and any labor for a full lease term for the full 20 years or 25 years. Which is pretty incredible because the batteries aren't even expected to live that long. So you're basically guaranteed a battery upgrade somewhere in this timeline. And that's huge. That's a huge benefit of the lease versus an ownership, which will be a little bit different. And so that's all good stuff. Now, some of the catches with the lease are if you look at the cost that you're going to pay month to month for the full length of the lease, it's going to be much more expensive than looking at a purchase system, especially a cash purchase, just an all at once upfront cost. That's going to be your best bang for your buck, your quickest timeline to break even. Financing too is going to be a better return than what you're going to spend on the lease. And there's small details even within the lease that can change that too. Most leases have what's called an escalator, or a small 2%, 3% rate increase that you're going to see every single year. And, that's something that can be discussed and worked on and even removed if that's what your sticking point is. So it's always important when you're going through this process, talk to a couple of different installers, find somebody that you trust, and don't take their word for it. Look up their reviews, talk to your neighbors. find out that there are a great company with great other homeowners they've worked with that had an excellent experience. And they'll explain all this stuff and walk you through it and truly have your best interests in mind when they're going through this process. But that rate increase, or that escalator, as it's called in the industry, if you do 2% or 3%, 1 year, 2 years, 3 years, that's not very much. But do that for 10 years, do that for 15 years, for 20 years. That's going to have that month-to-month cost go up substantially. Now, if you do that and you compare that to PG&E and PG&E's rate increases, you're probably still going to come out ahead. But it's important to know what you're signing up for. What are the details in that contract, and is it a good fit for your home, your family, and your timeline over the next 10 years or 20 years and beyond. So those are kind of the pros and cons to the lease. There's more we can discuss too, especially as it pertains to you guys in the real estate industry. There's still a lot to be desired when it comes to a lease. And that's where looking at solar ownership does have some big benefits. One of the best things about home ownership, and that's generally what I would suggest for homeowners, at least at this point in solar and where everything is look at ownership, even if that means ownership with financing. And the reason for that is it's yours, it's your stuff. It's adding value to your home right off the bat. In just the value of the equipment itself, but also, and this is something we can talk in more detail, but the long-term month-to-month savings you're going to see by not spending that money with PG&E or SMUD or whatever your utility is. One of the trade-offs is the warranties might be different for an owned system versus a lease, where with an owned system, the equipment itself always has a warranty through the manufacturer. So whether it's the battery manufacturer, the inverter, or the solar panels themselves, they'll have an equipment warranty that has nothing to do with the installer. But there's the labor warranty that is directly tied to that installer. So a standard warranty would be a 10-year labor warranty. Some offer 15, 20, and beyond. And so that's where I would say that's one of the shortcomings with ownership is you gotta check on that labor warranty and see what it is, and it's going to be different company to company. And then the sad reality is companies turn over all the time in solar. So if somebody did your solar install 5 years or 10 years ago, their situation's changed and they're no longer in the business. Well, your labor warranty just disappeared. And the lease side has, I would say, not as big of an issue with that, but the issue is still there, where some of these larger lease companies, not the installer, but the lease company behind them, some of those big guys have gone out of business recently too. So, there's always somebody that kind of picks up the pieces and will honor that agreement, but there's a lot of red tape and headache that goes with that.
Hey, Rob, you'd mentioned on the lease side, the length or longevity of the battery where you lease it, and it's probably your lease is going to outlive that battery, so you'll end up getting a battery replaced. And you mentioned on a owned system that there's warranties for that. What would you expect or anticipate for longevity of the battery or the inverter, or where that warranty, how long you really need to have it to make sure you're protected, and what that costs?
So most batteries or battery and inverter packages are going to have a 10 or a 15-year warranty on them through the manufacturer, with a life expectancy between 15 and 20 years. A lot of these battery systems just haven't been in the field that long to really know how they're going to hold up long term. But from what we're seeing them live, well beyond the 10-year mark, and expecting that 15 to 20-year mark as far as their longevity before they're ready for a replacement. And so, that is something to think about when somebody's installing this system. Is the solar is going to last for a really long time. That's pretty rock solid. The inverters, depending on which direction you go, those are pretty rock solid too. But the battery is kind of the one that we know is going to have the shortest lifespan. So something to factor in as a replacement before everything else is going to need to be replaced, probably in that 15 to 20 year range. And it's one of those things where the industry changes really fast, especially in battery technology right now. So what's going to be available for us in 10 or 15 years from now, it's really hard to say. It might be a whole different type of battery, a whole different, maybe it's not even chemical like we see today with lithium ion. Maybe it's a whole different platform with different longevity, different price points. Um, and that's really where kind of the horizon is in the solar industry right now.
Makes
What,
sense. Yeah.
yeah, on a typical system, what's like the cost if maybe you went your 10 plus years, you have to replace the battery. Is there like in today's market, what would that cost?
Yeah, in today's market, and I know there's really no average because there's just such a range of systems. And when we
Okay.
design a system, it's really specific to that home and that home's usage. And being here in El Dorado County, we have a really vast, as you guys know, the types of homes we work with are anywhere from your residential suburban neighborhoods to 100-year-old horse properties. We got the whole mix here. So um, the average solar, I would say we do projects anywhere from, I would say maybe 20,000 for solar and battery on the smaller side up to well into the six figures. So, let's just say for conversation, somebody's spending 50,000 on a solar and battery system. That's going to be a good size system for kind of a, 2,000, 2,500 square foot home. The battery portion of that right now can be anywhere from about 15 to 30K of that would be for the battery. And so a replacement on that's probably what you're looking at today's prices. And I would hope, just watching trends and how products develop 10 years from now, hoping that's about half of what we're seeing today. And that makes it, a little bit easier to deal with.
Yeah,
Yeah,
that
that's
makes a lot of sense. So down the road, one of these things you're weighing is, okay, yeah, I get the lease, I don't have to pay all this upfront cost and they maintain all the stuff, and I'm balancing that against I buy the system outright, I get lower monthlies right away. I don't have this escalating price, but I do have to budget like any other home improvement that there is a date in the future where I'm gonna have to replace it, like a water heater or a roof or anything else with a house.
Right. Yeah. And if you're a numbers person, you can run the numbers on what you're spending month to month with a lease over that 20 or 25-year period versus what the cash price would be. And you can see, well, this is why the battery's covered, because there's plenty of funds in that to buy batteries 2 or 3 times over and still make a profit. So, that's where it's important to do your homework, do your math, be honest with the installer you're working with on what your goals are, and your long-term plans is the biggest one.
yeah,
Now, looking
and
at that math. Oh, sorry, Dave. Looking at that math, the back of the napkin, just, we don't have to get too granular with it, but when you're comparing a lease to a purchase, sort of total lifetime of the system cost, Dave and I are biased. Well, I'll speak for myself. I'm not going to bury the lead. My recommendation throughout this podcast is going to be to never take a leased system. From a real estate perspective, it's a real pain in the butt. But we do try to give people the real facts and the numbers and lifetime numbers, ballpark which one generally works out best financially for the consumer, provided they have the ability to fund the system up front, either out of pocket or with a funding instrument.
Yeah, that's really what this whole conversation comes down to. And so long term, if you run the numbers, ownership with an upfront cash price is going to be your most economical way to go solar and battery. Second would be ownership with a finance option, and then third would be leasing. And the lease, you may end up spending 2 times or more versus what a cash purchase would be.
yeah,
Double or more over the life of the lease.
Yep.
sounds like APR on a lifetime of a 30-year mortgage. So
Yeah,
Yep.
yeah.
Yep.
and yeah, and I think that's super interesting. And I think in terms of like as I did a little research, understanding, a lot of people might choose to go the lease because they don't have any money, or maybe they don't qualify for financing on a purchase system. But if you do have pretty good credit and you qualify for financing on a purchase system, is that something that is typically orchestrated by you and your company? Do you have credit? Who finances that for you guys?
Yeah, that's a good question. And so when I'm speaking with a homeowner, And those are some of the early questions we have. Are we looking at cash? Are we looking at financing? Do you have the upfront capital to put into this? Um, and if they don't, maybe they've already had a conversation with a company about a lease, and nobody's explained to them, well, you can do an ownership with financing, and hey, let's run the numbers. Your credit's looking pretty good. This is what the monthly amount would be. This is actually a better option for you. And for most finance options in the solar world, you're looking at about 640 or higher for a credit score. So most homeowners are going to be able to qualify for that without too much trouble. They do look at debt to income and some other details too. So, in general, they're pretty easy to qualify for as long as there's no skeletons in the closet. Um, and you get a lot of the benefits of the lease where there's no upfront costs at all. We work forward on the agreement, we get the installation scheduled, you get solar and battery, and you haven't spent a dime, and you won't even see a monthly payment for probably another 30 to 60 days after install.
Yeah.
So a lot of benefits there. And the other thing that's worth speaking to is up until right now, December 2025, there's been a huge federal tax credit for solar ownership, as well as rebates from the utility, depending on which area you're in. SMUD has rebates, PG&E has rebates. And so those have been a big factor in the affordability of ownership too, even ownership with financing, where the federal rebate is 30% of the overall price. So if it's a $30,000 system, the homeowner is getting $10,000 in tax credits. Now that's going away December 31st, 2025. So that's going to change the balance a little bit on leases versus ownership. But if you run the numbers, even without the tax credit, a lot of the times ownership still makes sense. And one thing that I've seen in the industry is the solar industry is very good about adapting to change. There's been a lot of hurdles, or we like to call it the solar coaster, because it's just you're on this ride of ups and downs, and you guys see it in your industry too. But dealing just in the last few years with COVID, financial constraints, tariffs, NEM 2, NEM 3 with PG&E. Now the federal tax credit going away. So there's just been a lot of these hurdles, and it's always encouraging that the industry will find a way to move forward and find a way to keep solar as a good option for homeowners versus their utility. And that's true no matter what, whether it's leasing, whether it's ownership, whether it's financing. So as we move forward into 2026, there's a lot of discussion in the industry on how do we adapt to this federal tax credit going away? How do we keep solar a viable option for the homeowner? So it's exciting to see what changes are on the horizon.
Well, do you anticipate those changes potentially, specifically the rebates going away, making leases more expensive or making the escalation clause go up? Because isn't part of the way these solar companies are making their money is they get the rebates, not you. So that's part of the overall, financing of the thing for them, why they can pull it off.
Yeah, that's what's interesting with the lease and how this tax credit is going away. And this is where things might get shooken up a little bit as we move into 2026 with leases versus ownership. The This came out of the big beautiful bill that was passed in July this year. The solar and battery tax credit is going away for residential solar, but it is staying in place for a little bit longer in commercial solar, which also encompasses leased or TPO third-party ownership systems. So moving forward, the lease is going to have a little bit of an advantage for a while because the leasing company can still take a 30% tax credit on that system and have that value in when they're doing their pricing model. So that's going to be interesting moving forward. That the lease actually has a little bit of an advantage on the tax credit versus ownership right now.
Wait, Rob, you're saying that the big beautiful bill put the squeeze on everyday American homeowners, but made it okay for the big companies? Get out of here.
That's what I'm saying. Yep.
All right. Well, we'll move on from that. But that is interesting, and that could get. My experience with the lease people is they're really rabid. They're at my door all the time. Versus like own solar guys, you call them up, they're a consultant, you work through the process. they're not knocking on my door every 5 minutes. And I feel like during this period where they have that advantage, we might be getting a lot more knocks on the door while they're trying to make hay while the sun shines, while they have that advantage until it goes away.
Yeah, I could see that happening. Absolutely. Yeah, there's, I think the dirty little secret with leasing is there because the pricing is spread out over a very long period. It's easy for the salesperson to add some commission in there, and it's easy to add a little more and a little more and a little more because it's spread out so far. So what might only change the month to month price by $10 or $20 means that salesperson can be making $20,000 on this solar install. So that's kind of the dirty little secret, and that's why some of those ravenous folks in the industry that are knocking doors and feel like homeowners are being pressured by them, they have a lot to be made with the lease. Now, can that be done with an owned system? Absolutely, but it's a little bit harder to hide that additional cost because everything's in one payment. So, that's going back to make sure you're working with a company that you trust. Reach out to a few different companies before you decide who you're going to go with. And in solar, the big dogs aren't necessarily the most stable or the best or the most honest. It's usually the smaller companies that are, privately owned or family owned. They're the folks that are in your community. They're the folks you run into at the grocery store. They got a little more incentive to do the right thing by the homeowner because in today's world, bad news spreads fast, and you can put yourself out of business by not being honest or doing the right thing in a small community.
Well, and to that end, folks, as always, we'll have Rob's contact information in the description down below and in the pinned comment if anybody wants to reach out and look into solar. One of the interesting things you said early on in our discussion, though, that struck me was that escalation clause that, 3% a year, which I've seen on every single system. I've got a listing right now that has it on it. I was telling you guys offline before we jumped on here that my wife and I are in the market for a new home right now. We just looked at one. We picked one out. The kids loved it. And it had 2 solar leases on it for a total of $520 a month. When the homeowner's original bills were only $400 to $500 a month to begin with, it's $520 a month. It's going up 3% a year. They didn't even get any real savings. Somebody sold them a real bill of goods, on this lease system, but I was completely unaware that you could actually negotiate with the lease company and possibly bring that down. So for the people here who are inclined, in my opinion, to make a poor decision and lease a solar system rather than buy it, if they are going to go that route, is there anything else they can do to try to bring this overall cost down? When we're talking about a cost that over life system could be 2x what it is if you buy it, any little bit of savings, can help there.
Yeah, that's in solar, it's kind of a known thing where prices are negotiable, especially if you have gotten prices from multiple companies. Then that gives the homeowner some power to go, oh well, X company's offering me this at this price and this warranty, and Y company's offering me this at this price and warranty. What can you guys do? And so like most things, you can start shopping around. The more folks you talk to, the more information you're going to have. If you are looking specifically at a lease, that price is negotiable too, and that escalator is negotiable all the way down to 0. So those are some things to keep in mind. And the end result is you want to work with somebody that they're telling you all of the information you need, whether it's good, whether it's bad, and anybody can tell you whatever they want, but if it's not in the contract, then it doesn't really exist. That's what it comes down to. Make sure you're reviewing your contract. And I've even gone as far as if I'm working with a homeowner, I'm more than happy to compare bids they have and go through those details and bring them up to them, whether it's beneficial for us or not. I want to make sure the homeowner is fully aware of what they're signing up for and it's a good fit for them.
Yeah, that's awesome. What do you got there, Dave?
Yeah, and I just kind of doing simple math here, Rob, and trying to understand. And you mentioned that you do systems for a 2,000 square foot house to large 100-year-old homes that are horse properties and whatnot. Kind of just understanding that math of where if your utility bill, and I'll just throw a number out there. I don't know, Rich, what's yours in Placerville, PG&E? $400 a month on average.
I mean, for the life of the year, $250 on average, but for June, July, and August,
Yeah.
it's like 500, 600, 700. It's gnarly when it's hot out.
Okay.
Yeah.
So yeah, so you're probably on average three, if you average that out, you're, $300 a month or at
Yeah.
what point, because people don't like writing that check every month if you're getting, so where's that compare with a system on a 2,000 square foot house? I'm used to paying $300 a month for electricity. What would I expect to pay on a solar lease? Or excuse me, a solar purchase if I were to finance it?
Yeah, so that's a good question, and I'll premise it with saying again, every situation is different. So I always say if we're serious, let me put something together for you with your exact usage, and we take a look at the whole year because it's going to be every home is going to be different from summer to winter. How's the home heated? Are they running an AC? Is there two ACs in a pool? All these things can really change those factors. But if you're doing $300 a month on average, I'd say you're doing pretty darn good. Most folks that we're talking to, they're averaging closer to 500 or 600, and those summertime bills can be above $1,000 or 1,500 or even higher. Yeah, it's painful. But with financing, we should be able to show you at least $100 or more savings per month. And something to think about these days, because we're doing solar and battery, especially in a rural area, you're saving money on your utilities, but you're getting backup power kind of as a freebie. So, folks, a few years ago when we had a lot of the PSPS fire outages, folks were installing whole home generators, and you're kind of getting the built-in home generator for free when you're looking at solar and battery. So it really is a win-win, especially for our area, saving your monthly costs on energy and getting some backup power.
Yeah, and my guess would be too is you're going to be much more comfortable in your home because I would say me and Rich are probably relative. If I'm leaving the house, I'm changing the temperature. Like, I can
Yeah,
I can deal with it when I get home, or do it from my phone and make it cooler 5 minutes before I get home. But
We're
I
old and
would guess,
cheap. Dave is saying we're old and cheap.
yes,
yeah,
yes,
I'm right there with you guys, and that's the conversation we have too. Is the family right now? Are you guys living how you want to live, or is it 85 in the house and everybody's miserable and sweating? Let's plan this for the future. Let's make sure we can keep the AC where it's comfortable, or you guys just got an electric vehicle and now we're charging an EV, or we're putting in a pool next summer. Whatever those changes are, let's plan for those and build the system around that too. And kind of going back to what you were saying, Rich, on this house you guys were looking at with two leases, that's a whole other issue that most folks aren't aware of. Is when you do the lease, there's a tendency for that system to be designed smaller and not large and robust, and that doesn't set you up for success long term. That doesn't factor in changes over time. In general, as an average, homes are using more and more electricity as we move forward. And so when we design a system, we want to make sure it's big enough that it's going to do the job today, but also 5 years, 10 years from now. And sometimes things are unforeseen. In-laws move in and usage goes up, or whatever the case may be. And with an owned system, even with financing, we have the ability to come in and build onto that system. We can add more solar, we can add more battery storage. With a leased system, once that lease is installed, what actually happens a lot of the time is that that package gets moved to a different company, to a different bank. They get bundled and sold just like mortgages do. And so that system can't be touched. You can't add on to it or change that in any way. And that's where you end up seeing homes that have a second lease. Now they've had to increase the system. Now there's two leases on it. So that's a whole other level of complications that most folks don't factor in, is that you're kind of limited on what you want to change down the road on a lease versus ownership.
Oh yeah, absolutely. And one quick question on the way the financing works. So with the leases, these things run with the house. So this is a good place for us to shift gears into the real estate challenges with these things for you guys listening. But the leases run with the house, so the buyers have to assume the lease in order for the home to sell, or the homeowner could pay off the system. But these payoffs are pretty large usually. When
Yeah.
you independently finance that solar system, are you guys attaching that independent financing for an owned system as a lien to the property, or is that a personally guaranteed loan that runs with the person?
So yeah, you're right. So the lease, kind of the biggest hang up in your guys' world is that lease stays with the home. And so if that home goes on the market, the new homeowner has to agree to take over that lease and also has to qualify for it, which may be a problem if they've just had their credit ran and they just open a mortgage. They may not be able to qualify for this lease, and then the whole deal falls apart. Or the seller can take that payoff, which is usually extremely high on a system that at this point has very little value for the equipment itself, has very little value for the leasing company, and that payoff is usually almost at current market value for a brand new system. So it's ridiculous. Now I have heard stories of that being negotiable too, and you say, well, I don't want to pay 20 grand for this 5-year-old system. How about we give you 5? So there's some wiggle room there. It doesn't always work, but it's worth a shot. Now I'll premise that with saying on the lease side or the TPO side, those companies have been making big strides in simplifying this because it is a known issue. When a home is changing hands, this lease can become a huge sticking point. So they do have different leases, and again, this is something you want to be clarified on when you're agreeing to this. Is every leasing company has different rules and different options for when a home changes hands. Some of them make it much easier than others, where they'll just roll it into the new homeowner, not a problem. Or they have, the current homeowner has options to buy the lease and turn it into an owned system at the 5-year mark and the 10-year mark, or any time after the 5-year mark. There's all kinds of different ways to go about it. Just want to make sure that's clear and that's stated in the contract. And again, if it's not in the contract, it doesn't exist.
You bring up a really good point, Rob, in terms of the financing and transferring the financing, especially on a lease system where the new buyer has to qualify for the actual solar lease, as well as how does that affect their qualification for buying that home in terms of their debt to income ratio. And it's, the way lenders look at it, as a lender, it's kind of ironic where if there's a solar lease and it's, I'll just say $400 a month, we're going to hit the buyer with that. Well, we're pretty sure that if there wasn't solar, they're paying PG&E $400 a month, but we don't hit them with that. It's because it's in the lease situation, it's tied to the property. It's, a lien on the property where, basic utilities are not per se. So, and me and Rich, we talk about this all the time in terms of like, if there's solar on a house, and as a lender and a realtor, when you're out looking at the property, you have to understand that's going to affect the purchasing power for that particular buyer. I think, Rich, we talked about this. It just in this scenario that we're talking about, $400. I mean, that could be a $75,000 purchasing power. So where you qualified for a $600,000 house, with that solar hit, now you only qualify for a $525,000 purchase price. Like it's, or the equivalent loan for whatever your loan to value is. That it's significant.
Yeah,
I think a lot of buyers don't know that. Sorry, go on, Rob.
Oh, I was going to say, Rich, I know we talked about this a little bit in the past, but that's an area where I think the solar industry and the real estate or lending industry need to have some more conversations around that, because like you were saying, Dave, well, if it was $400 a month going to the utility, that doesn't go against the buyer's buying power, even though it's identical. They're paying one utility or they're paying a solar utility. So, those are some areas where I think we need to have some more conversations and all, be more educated on the benefits of this and see what we can do to help this transition, because it is a problem. And no matter what I hear on my side as far as how leases and TPOs are getting better and making this transition easier, I talk to folks like you guys and I hear the same things. That it's nothing but a headache. And, that's the first question when you roll up to a house and you see solar on it. Is that leased or is that owned? Because it's going to change the situation quite a bit.
Yeah, it was literally a non-starter for us on the how the kids loved the place, and we said, no, there's no way. $520 a month, 2 leases. I'm not fooling with it. Now, to be fair, by the way, if you were to finance an owned system, now Rob, that's a personal loan. It's not attached to the property.
So good question. Yeah. So we didn't talk about the flip side. So ownership with financing, there's a few different ways to do it. There's solar specific loans. They're personal loans. They don't do a lien on the property, but they do a construction lien on the equipment. So there is, and this is more your guys' world. So if I'm not using correct terms or whatever, feel free to jump in. But when that home is going to be sold, they will show that construction lien on there. And I've had this come up where, at least for the solar banks that we work with, it's as simple as giving them a quick call, and they'll get that removed so that the property can move forward. And that again goes back to, at least for us or for anybody else you're working with, make sure that the finance banks that company's working with are good companies too. And make sure when you call their hotline, it's a human that picks up, and it's somebody you can reach easily, not a voice message or somebody that's going to call you back next week. All of these little things can make something really easy and seamless, or it can turn into a nightmare.
You bring
So
up
those
really
are things to think about.
Yeah, that's a really good point, Rob. And I've been in this situation a lot where buyers buying a home, there's a solar lease or an owned solar that needs to be transferred. And when I talk to the title company, we need to get that lien release before we could record the loan. And so typically there's either what's called a subordination or a lien release with a re-record after the fact. So if I'm, Rich is buying a home and there's solar on it, the existing solar company may have to release that lien so Rich's loan can record in first lien position, and then it automatically re-records back in second position. And when I talk to title companies, they're like, let's look at this. Who's the company? Oh, shoot. This is going to be a 20-day turnaround deal.
Yeah.
We're supposed to close this transaction in, 30 days. And, there's 2 holidays. This isn't going to happen because they just, or there's the flip side where like, oh, that company's great. I'll send them a fax today and I'll have that temporary release for title to provide to the lender next week. So those are all important things that I think like guys like Rich and myself we're privy to, and they all come into play with, if Rich is going to write a purchase contract and it's 30 days, well, we certainly better know that solar company based on that situation can do what we need them to do.
Yeah.
And
Yeah,
Dave,
that's
in
going to
most
be
of those
true.
cases, oh yeah, sorry, go ahead, Rob.
Oh, I was going to say, and that can be true for solar financing on the ownership side as well as on the leasing side, especially with some of the turnover we've seen in some of these big leasing companies over the last couple of years. You have a nationwide company that goes out of business. That puts a lot of homeowners in this bind, especially if they're right in the middle of buying and selling the home, where nothing's going to happen quick. This might be a 30-day problem or a 60-day problem, or who knows how long this is going to take to get fixed. And on the leasing side, or excuse me, on the ownership side, there's different finance options too. There's kind of the traditional solar banks like we were discussing. There's also credit unions that are great for folks. So folks can do their own financing if they have a bank that they work with, or there's all kinds of stuff that's in between. The main thing is make sure their options are what you're looking for, and everything's explained clearly for you. And the same, the financing has some hurdles to it, but from what I've seen, those are much easier to fix when a home is changing hands versus leasing. And there's all kinds of in-betweens where with financing, this is what I see as the benefits of ownership with financing, is you can make your regular monthly payments, you can make additional payments, you can pay it off early, you have a large mix, you can even do half of the cost up front and the other half finance. So you got a lot more flexibility on how to go about paying for this and how you want to do it long term versus the lease.
Yeah.
And Dave, one question I had for you is, do you find that most, on my experience, but realtors do less transactions than lenders. So lenders work with a bunch of realtors, so they're processing a larger transaction volume in general than any individual realtor is. But in my experience, most time with owned solar, when the seller sells, they're just paying it off as part of it. It's just getting it's like same as the payoff on the house. They're paying it off in the course of the transaction, where I don't see a lot of owned solar financing trying to get assumed or transferred with the property. Is your experience the same, or have you had a fair few where the new buyer is somehow taking on that owned solar financing?
Yeah, and Rich, that's a good question. It really depends on the market that we're in right now and what the negotiation is. And I think like Rob brought up earlier, where someone says, well, you owe 10,000, I'll pay you 5,000, and you need to pay that off as part of the transaction. It depends on the type of financing, and there is a UCC filing often on the property, or some type of financing instrument that shows as like a mechanic's lien, so to speak.
Yeah.
So they're all a little bit different, but on the purchase normally, and especially if there's equity, that gets built into the negotiation and the contract. And ideally it gets paid off through escrow
Yeah,
where,
that's been my experience too, where the leases never get
yeah,
paid off in escrow because the buyout is so astronaut. You really haven't, you're ticking down your monthly, your
right.
principal on that independent financing the way you would on a home. And it's just not the same on the leases. So I almost never have anybody willing to buy out their lease at that time of sale.
Yeah. And that leads to the next question. If I'm Robin for you is, we work with folks all the time that are getting ready to buy a home, and in solar somehow was just recently put on that house, whether it was a lease or a purchase. And it just makes things more difficult. It's fine, but just more hurdles. If you are talking to a potential or a homeowner that's interested in solar, what's that kind of like? If they, you probably ask the question, do you plan on selling anytime soon? What's that like? That kind of break even point, or is it 2 years? Is it 3 or 5 years? What's that look like for you guys in terms of whether you'd recommend they move forward with solar or not?
Yeah, that's a great question. That's always one of the first things we ask is, what's your long-term plans in this home? Are you guys planning on purchasing a different home or leaving the state or whatever you're doing in 3 years, or is it 5 years or beyond, or is this your forever home? And usually we want to do solar on forever homes, or at least homes that folks are going to be there for 5 or likely more like 10 beyond years. That's where you're going to see that break even point. You're going to see the benefits of this solar. Where we're at right now in the solar world, at least here in Northern California in PG&E territory, is for a good sized solar system, solar and battery. And again, we design large systems, so we design this to future proof the home. You're looking at a break even point right about 5 to 6 years right now. Now, with the tax credit going away, that might add a year or two. And I think what we'll see is the solar industry working hard on that as we go into 2026 and trying to get that timeline back into the 5 or 6 year mark, or even lower if we can.
Yeah. And I got to believe there's some, I'm not saying, no, there might be some unscrupulous folks out there that are encouraging someone that might be selling their house soon. Hey, do this solar lease. It's going to increase the value of your home when you go to sell it. Or that, I feel like that must be happening where, or they're, rushed. We got these credits right now. They're going to go away. Take advantage of it. You'll be able to sell your house for more, which isn't always the
Yeah.
case. So.
Yeah, unfortunately, there's a whole mixed bag of folks that are in the solar industry, and again, it goes back to work. At least have the discussion with multiple companies and see. You start to see who's being honest, who's being truthful, and who is kind of stretching the truth a little bit, and and then you'll find who's going to be a good fit for you. And again, everybody you talk to, you're going to learn a little bit more and have a good idea of what's a good fit for me in this home. If I'm planning on selling in a year or two, this really doesn't make sense. I will say there is a discussion around because the lease is no upfront cost, and because you can see monthly savings right away. At least the conversation sounds good that this in the short term will save me money right away, and then when I go to sell the home, hopefully they're having that conversation. On how it's going to change hands or how it's going to be dealt with. But if they're not, then unfortunately, a lot of people don't learn that until they're in the middle of trying to sell that house. So it is an issue. And again, it's always good to talk to multiple people and get a good idea. And that's usually where homeowners learn, okay, well, this is a lease option. It has pros and cons. This is ownership option. This is ownership with financing. Which one is actually the best fit for me? Or should I just wait until I move into my next home and then I can do this process?
Yeah, I think that the difference for me really is, and tell me if I'm thinking about this wrong, but when I look at owned solar, I look at I've fixed my utility cost essentially in the same way I fix my housing costs with a 30-year mortgage, and with a lease I don't, because that escalation clause. So like we always talk about, even the dirty little secret in our industry is out of the, 130 years we've been recording things, real estate's really only kept pace with inflation most years, about 3%, right? It's not, the individual home isn't as much of an appreciating asset except for the last 20 years, which have been bananas. but for the most of its life versus something like the stock market that you're getting, nominal 10% or, inflation adjusted 6 to 7% returns for a 250-year life cycle. The real benefits in real estate is that sort of locking in the housing cost and the forced savings account effect of paying that down over time. And your principal and interest never goes up if you finance it right with a 30-year loan instrument. Similar with your owned solar, you're paying that down over time. You've offset whatever amount of your bill you've offset, and that's all fixed for you, versus with the lease, that 3% additional, you have that break even point that you're talking about 5 to 6 years with the own system. And it kind of goes the other way a little bit with the lease system, where there's sort of a breakover point where now that you're getting really diminishing returns on that leased system down the road if you stay in that house long enough to get there.
It's true. I will say it's something that has to be discussed and has to be looked at. And that's where I think a lot of the leased options, homeowners aren't seeing the long-term picture. How is this going to look? What is this 3% escalator? Let's talk about that. What's that price, that monthly expense going to look like 10 or 15 years from now? And weigh that against the benefits of, okay, I get a battery replacement. I get everything taken care of. If there's an issue, I give these guys a call. They come out and fix it with no hassle. Yeah, you just got to look at how this is going to work for you long-term and run those numbers, or work with somebody that'll run them for you and decide if it's a good fit or not.
Yeah,
and now it's hard in our industry when we talk about things. Dave and I are always having to kind of hedge and say, well, we can't specifically quote an interest rate or a payment because everything's really specific to your situation. It's very hyper personal, like you, with how often do you use the heater? How often do you use the air conditioner? How many people you got living in your house? But if you had to stick sort of a pin in it, like, on average, I felt like this 520 was a little extreme on the lease side that I just saw. On average, what are you seeing a lease payment, in the industry?
I mean, they're across the board. And like I said, when we first started talking, generally anything is going to be better than sticking with the utility, specifically PG&E. I know, Dave, you're in SMUD, and we can talk specifically to SMUD or SMUD, or folks that are in Roseville or Liberty Utility or some of these other ones. It's going to change the break-even timelines. It's going to change some of the benefits. But in PG&E, because PG&E rates are so high and they continue to increase them, no matter what, a lease or ownership is going to be a benefit as far as your monthly expenses go. And then it's all about getting into the details. Is this escalator something I can live with? Do I understand it, or is that not okay with me? And figure that out up front, not after the fact. But yeah, I mean, pricing for a lease is going to be comparable to ownership with financing. Again, depending on the system and depending what the needs are, it's going to be in that $200 to $300 range, probably saving you about $100 a month. Again, it's all over the place, so it's hard to give a specific, but the way that the leases are created, when your installer does the design and when they put together the program, the program has to show the homeowner a savings on year one. It has to show them some kind of savings. So on year one, if it's more expensive than what they're paying in the utility, then the leasing company won't agree to the project. It has to show a savings. And that's where the escalator kind of sneaks in there, where the higher the escalator is, just like you guys know, the lower that first year payment can be, but it'll catch up at some point. Versus a 0% escalator, no escalator at all, that year one payment is going to be higher, but it's going to stay the same for the whole program length. And that's really what you want as a homeowner. But again, you got to run the numbers and make sure it's a good fit. And that kind of ties into the leasing program works best on a nice, clean roof, no shade, lots of southern exposure, where that system's going to produce a lot of energy. And that's what the leasing company sees as the value on that system. So as we get into more rural properties and unique setups, we might be dealing with some shade in the foothills, or we might be doing a ground mount, or putting it on a steel garage, or a modular home. Some of those things aren't possible with a leased system because it just gets too complicated. It gets too weird. Where with ownership, you have more flexibility on an install that's going to work for your specific property.
Yeah, that's a really good point, especially for one of our primary markets here, which is El Dorado County. It can be all over the map. If you're in Pollock Pines, man, some of these places are in deep, dark holes that barely see the sun. That's gonna change everything, completely. But I think from the 30,000 foot view for our buyers out there, I think the takeaway here is that these lease systems cost you, like, Rob's saying, maybe on average $300 a month. Dave, what's that, 50,000 in purchase power?
Yeah, in today's interest rates, yeah, it's about right.
Yeah, so you're looking at, if you are a $600,000 buyer, or let's call you 700,000. You're looking for Cameron Park, $700,000 buyer. Now if you find a $700,000 house that you're in love with, it's got this solar lease on it. If 700,000 was the absolute outside of your qualification limits, which a lot of our buyers these days, because of the lack of affordability, are maxing out what they qualify for. Well, now you only qualify for 650, and you literally can't buy that house because of the solar lease, which isn't going to be the same with the owned system. You can negotiate for the seller to pay it off, or the seller might have already paid that down to a point where it's much lower. There's a lot more options there. So from a real estate perspective, these lease systems really jam up a lot of our buyers. Some buyers just don't even want to. They've already done the research, and they don't see the lease as a good idea to begin with, so they don't want to agree to it. Especially like Dave's saying, it always seems the last five of these I've encountered in the last 2 weeks have all had 22 years left on their term. 22 years, and people don't want to encumber themselves that way. And so, it can be just a non-starter. You shrink your buyer pool, which is not a great idea, especially in a declining market like we have now. But also, you just knock people out where their home of choice now is out of reach because of these solar leases. And I think that is not an education level that happens a lot in the leasing community, to how this is really going to affect people down the road. So we don't make a lot of hard rule recommendations on this podcast, but for my money, I would be staying away from the leases, just because it's going to be such an impediment to sale potentially down the road. I'd only be looking at owned solar for myself. That's kind of where I land on this.
Yeah, and Rich, I would agree with you from my world. Is I would suggest, myself being a homeowner and working with homeowners, I would suggest looking at ownership, even if that's financing with ownership versus a lease. But I will caveat that and say things change all the time in this industry, and I'm thinking about this timeline you guys are saying, where a lot of folks you've been working with have had a lease that they've only had in for a couple of years, with 20 plus years still left on it. That comes and goes with where we're at financially in this country. And when interest rates are really, really low, we're doing all financed ownership. When interest rates get really, really high and people have less capital to invest in this, that's where leases become popular again. And so it could change in the future, where, especially right now, as we see the federal tax credit going away, that's taking away one of the major benefits of solar ownership and giving that advantage to leases. I would say, for me personally, in the future, I'm not necessarily against leases. I want to make sure homeowners fully explain the pros and cons to them. And the battery replacement is a huge advantage in a lease system, and having that full coverage, no matter what it is, for 20 or 25 years is a huge advantage. And so, if I see those numbers get more and more beneficial to the homeowner as far as monthly costs go, along with this long-term coverage, I could see a place where the lease is the best option for a homeowner. But as of right now, today in late 2025, ownership, one way or the other, is still the way to go.
Yeah, and I can imagine on that, Rob, that there's got to be, and at least it happens all the time when I'm running numbers for folks that are looking to buy home, but some hybrid approach. Maybe you have a little bit of capital where, and we'll just say it's a $50,000 purchase solar system. Well, instead of financing all 50,000, maybe I say, hey, Rob, I have $10,000 I can put towards this. This is going to lower my monthly finance payment by X, which is still going to save me $100 a month on my utility bill right out the gate. So it's worth it for me. What's the recapture rate on that? I could see where you probably are in that scenario a lot, where, someone can, willing to, take that hybrid approach.
Yeah, we do that a lot, and that's the benefit of a financing ownership, whether it's through a traditional solar bank or with a credit union. We have that flexibility. We can do half down and then finance the rest. So people that have some capital, put it towards the solar and keep that monthly expense nice and manageable for them. And I will say the TPO or the lease side is working on different scenarios similar to that too, or things that are like pre-purchased PPAs. And so you have an upfront cost for this full 20 or 25-year program. And you, at that point, the cost of the system is able to take advantage of the tax credit, because the tax credit's still allowed on the commercial side. And then the homeowner, and again, this is program to program, so it's nothing across the board. They're all a little bit different. But with this prepaid program, the homeowner might be able to take full ownership at the 3-year mark or the 5-year mark, or something on a much shorter timeline. That doesn't mean they have to wait 20 years and then still basically pay full price for it. So, the industry, like I said, it's really good at adapting and working through some of these issues and coming up with new solutions that are beneficial for the homeowner. So I'm not completely against leases. I don't think right now they're the best option, but things change all the time. So I might be proven wrong, in 6 months or 9 months with how fast this industry changes.
Well, it is an interesting point, because when I was researching for this episode, there's about 9 to 10 million homes with solar PV on them in the country, give or take. And they're estimating 1.8 to 2.5 million of them have a lease system on them. But it did say that the leasing boom was like huge in the 2010s, like 2014, 2015. That was representing like the biggest chunk of the industry. And then it has tapered off and shifted more and more to own solar. But then just in the last few months, Dave and I are seeing all these leases coming up, to your point, where the financial squeeze is on everybody with high interest rates and tariffs and escalating costs. So the industry ebbs and flows. And I think the thing we tell people all the time on this podcast is the most important thing you can do as early as you can do it with any big purchasing decisions: get an education, get a trusted professional involved, and get a good education, because things shift all the time. And you want somebody who's going to give you that nuanced take that isn't just, this is right, this is wrong, but here's where things are going. Here's what I think is the best solution for you, your family right now. We say all the time, real estate is hyper local and hyper personal. Sounds like solar is very similar. So to that end, again, I'll have Rob's contact information down in the description down below and in the pinned comment, so you can reach out and get yourself an education and see what works best for your family. I think this is a good place to wrap it. My head is spinning, Rob. You've given us a lot to think about. And a really good nuanced take on the solar industry. I really appreciate you being with us today.
Yeah, it's been my pleasure. Great to talk to you guys, and I'm happy to jump in with questions you guys have, or any of your clients. Happy to share information as much as I can.
Awesome. Thanks, Rob. Appreciate it.
All right. Thanks, everyone. I usually say you've made it 1 hour here listening to two middle-aged men prattle on about real estate. I won't color Rob with that same brush, but you have listened to 3 of us prattle on about solar for a whole hour. So if you're still here, folks, hats off to you. You're deeply committed to your own education. We appreciate you, and we will see you on the next one.